Here at Trade Our True Trading Group. July 15th is a red day for me. Not the way I wanted to start the week off. Very slow day. I'm starting to, I'm starting to really get like that summer trading kind of feel. We've had a couple days now in the last like 2 weeks that have been very, very slow days. Lighter volume, not a lot of follow through, very little continuation, and it's very hard to come by. You had a couple stocks over the last couple weeks that really made some good moves, but we've had days mixed in there that really, really felt like summer trading. And I'm starting to kind of get a little bit of that sense and that feeling. So this video, I only traded CAPR today, and I didn't get any follow through or continuation on the trade. So that's why I'm finishing the day red. But a member had asked a question in chat today, which reminds me, tomorrow's TGG Tuesday. Chat room's open, free for everybody. So go to truetradinggroup.com, upper right-hand corner. You click on it'll say TGG Tuesday. Click that and register, and you will get a link that'll give you access to our chat room for free tomorrow. Okay, so make sure you guys come in chat, say what's up, shoot me a DM. And just let me know you're from the YouTube community. I'd love to hear from you guys. But a member asked me a question in chat today that sparked an entire conversation after the close and the end of the day recap. At the end of the day, I always go over in chat like lessons that we can learn and take away from the day. And that's what prompted this video, because there wasn't a lot to talk about. It was a very slow day. But the member had asked me, Mike, is there something different that you look for when things are red hot versus when things are slow and quiet? Like, are there different setups? Or are there different indicators that I should be using? And it's a very good question. But the answer to the question is no. I don't look for different setups. Okay. But what you can do is use is the way that you execute your trades is what I change. Now, what do I mean by that? Let me get into a little bit more detail so you guys understand more what I'm talking about. The reason why I don't look for different setups is because a grade A setup is a grade A setup. Doesn't matter if it's a red hot market or a cold market. Okay? If you start to look for different things when the market is slower, that's how you can fall victim and get sucked into a poor quality setup just because of sheer boredom. Okay? I always say when we have slow days, I'd rather be bored than lose money any day of the week. Okay, so I don't look for different setups. The setups are the same. The chart patterns are the same. The technical indicators, the catalysts for the trades, the triggers and everything. All of that stuff stays the same. Okay, whether the market's red hot or ice cold. All of that stays the same. But what changes is the way that I execute my trade and the way that I manage my position. Okay, and you can use, and this is what I do. So I want to share this with you guys. So in case we really do get into like a lull of summer trading, I want to share with you guys how I go about adjusting my trading, and it has everything to do with the tier trading strategy. I teach all of our members a tier method that I learned when I used to work at the hedge fund, because when you're entering and exiting very large positions, you can't just execute it all at once. You have to tier in and tier out. So that's where I learned originally the concept of tier trading, and I've just made my own little tweaks to it, and I implement it into my regular now retail personal trading, and it's something I teach all of our TGG members. With this, we're talking about specifically exiting your position. So tiering out of a winning trade. Okay, I don't tier out of losers. I always exit the loser just, completely. But on a winning trade, I tier out. I scale out of the position. And that helps you stay in a winning trade longer. Typically, the way that I tier out of my position is as soon as the stock makes the move and the trade works in my favor, I sell 25% of my position. Okay, that locks in some profit and it reduces my risk and makes it a lot easier for me to hold on to the rest of my position, the bulk of my position, for the follow through and the continuation move. Once I get the follow through, I sell 50% of my position, the original position. Okay, so 25. So if, let's say I had 10,000 shares, the first take profit's 2,500, 25% of the position. The second take profit will be 5,000 shares, or 50% of the original position. And then I usually will hold 20 to 25% of my original position size in case I get real follow through. And that's how you stay in winning trades longer. That is typically how I go about tiering out of my trades. When the market slows down, okay, when the market slows down, you can really start to play with and adjust those percentages to help account for lack of follow through or lack of continuation. So when things slow down and the market gets a little bit tighter and quieter and we're getting a lot less follow through, volumes lighter, what you will actually see me start to do is when I get that first move in my favor, I sell 50% of my position. Then if we get continuation, I sell 25%. And then if we get the real big, follow through afterwards, then I sell the final 25% of that position. So instead of 25, 50, 25, it becomes 50, 25, 25. And the reason for that is if you're not getting continuation and follow through in the overall market, you're going to want to be quicker to take your profits. You want to exit the bulk of your position sooner in the trade. Okay, because when the market's hot and you're getting that follow through, you're getting that continuation, you want to stay in that trade as long as you can. You want to hold on to the bulk of your position and scale out as the trade works in your favor. But if you're just getting like one and done type moves and you're not getting, a move, consolidation, a move, consolidation, a move, you're going to want to take your profits and be out quickly. Okay, so that's why you'll see, I'll take 50% up. Now, if the market is just terrible and like things are really bad, then maybe you'll see me take like 75% off, and then I'll just take 25% off, and I'll tier out in two pieces instead of three. But I haven't done that in a while. I'm not saying that that's where we're headed. I'm just saying that we've had some slower days lately, and this question in chat by this member prompted this discussion, and I felt like it was a good one to share with you because you can't go into every day with the exact same mindset, pedal to the metal, you're in seventh gear. That's how you can really get yourself into trouble. And these are some of the adjustments that I make using that tier trading method that it works for me. It's worked for hundreds of our members, and hopefully it works for you guys. Okay, so like I said, you can really play with those percentages. It's not set in stone. It doesn't have to be 25, 50, 25. And we have some members that do 33, 33, 33. It's really up to your personal preference, but that's what I do. And that's the beauty of it. You can really tweak those percentages based on if the market's red hot or if the market is cooling off and things are starting to tighten up. You can reduce your risk and take profits quicker just by making those little adjustments in your execution while still going after the exact same high quality grade A setups that you look for in any market condition. All right. Remember, tomorrow's TGG Tuesday. I hope to see many of you in chat. Take care, guys.